Looking at the housing sector, I suppose one thing that many people would say, well, at least if I can hang on to my house, I've got an asset. Prices might go down a bit more, but they will eventually go back up. In terms of house prices themselves, I suppose there is more of a downside at the moment than an upside in the market, but how far do you think house prices will in fact fall?
There is, and worth a quick bit of context. So in the US and the UK, house prices today are where they were in 2004. If that were to happen in Australia, a fall in our wealth of that magnitude, that would mean that we were well and truly, just as badly off as anybody else in this crisis. Now, why is that not going to happen? First, we have great short-term strength supporting housing prices in Australia. Population growth in Australia in the last year, 360,000, supported by 200,000 migrants. And that means a lot of demand for housing. Adding the fact that we don't have unsold houses by and large in Australia. Unlike the US and a bunch of other places, we have very few rental vacancy rates. So we don't have too many houses given the size of our population. So it's not just populations flowing in, but they don't have many places to go. Interest rates have, of course, fallen a very long way. And in Australia, unlike America, for example, interest rates fall further because our rates are tied to short-term interest rates. And so when the Reserve Bank cuts rates, mostly you see that as lower mortgage rates in Australia. Whereas in the US, they're tied to longer-term interest rates, and so they move more slowly and have moved rather less than Australian ones. So all those things, the government stimulus package, the 20,000 homes they're looking at, all those things support Australian housing prices. But we still think that the average Australian home will lose 5 or 8% in value over the next 12 months. And it'll then be a grind for a couple of years beyond that, because the short-term supports are brilliant. The longer-term picture is not so good. You look at housing prices in Australia, and they are too high. The number of years of average income to buy the average house is higher in Australia than anywhere else around the world. Now, housing prices in the US are currently too low, but you look at ones in Australia and they are too high. And we share many of the characteristics of the UK, Ireland, nations that are seeing a lot of pressure on housing prices. We have many of those same structural problems.
When it comes to interest rates, are you anticipating another fall in official interest rates?
The Reserve Bank has now cut cash rates to 3.25%. We've been forecasting that they'll go down to 2.5%, and it's clear from what the Reserve Bank is saying that it hopes it doesn't need to do much more. Equally important is the realisation that it can do more than that. You have seen interest rates in a number of nations around the world go very close to zero, and in extremis, you can hit the panic button of printing money, and increasingly nations around the world are doing that. So I think currently we see the Reserve Bank cutting interest rates a little further down to 2.5%, but they will do what is necessary. They have a lot of firepower, and I suspect it may have to be deployed at some stage through this crisis.
I want to return to the global situation for a moment. One of the things that jumped out at me from your most recent economic forecasts, the ones released in January by Access Economics, was that while we know that when China sneezes, Australia catches an economic cold, in this case a flu, the outlook for China was actually a lot better than I anticipated. You still see reasonably strong growth, albeit quite a bit lower than it's been, but reasonably strong growth in China over the next 12 to 18 months to 24 months. That obviously is a positive.
Oh, it is, and China has the potential to turn around earlier than most nations. But it's actually not the timing of the turnaround or indeed the current crisis, which is the key point there. This is an enormous financial crisis, and the pain of it will be notable. And financial crises linger for longer than most economic downturns do. But we're always too optimistic during the booms and too pessimistic during the busts. The financial crisis will go. Banking markets will get repaired. The cost of money will go down, which will start to encourage people to spend. Confidence will return. A global financial crisis will drop off the front page, and Brad and Angelina will be back on the front page as they should be, and you'll see those signs, and you know, so those credit spreads, banking markets will recover, confidence will recover. You'll start to see share markets edge up. For Australia, vitally, you'll see the spot steel price start to edge up. You'll see an end to housing price falls in Australia. All those things, you know, for the globe, for Australia. This too shall pass. What won't pass, what will last for many decades to come, is an industrial revolution. You know, it might have begun a couple of centuries ago in dark satanic mills in the north of England. But all it is people moving from farms to factories and becoming more productive. You know. And you started to see it a couple of centuries ago that somebody in a factory could produce more value in an hour than somebody on a farm in China, say. And that industrial revolution that's notably raised the effectiveness of the average worker, and therefore the incomes of the average worker, and therefore the national incomes of the nations in which they live, that's been the key underpinning of history in the last couple of centuries. Now, slowly around the world, that industrial revolution has spread until in recent years, it wasn't so slow. It was fast, because it is easier to catch up, you know, to the highly effective, highly productive, rich economies of the world than it is to further improve productivity, to come up with a new and fancier computer or piece of equipment, or an economic reform, you know, federal-state relations in Australia, for example. Those things are hard. So income growth, you know, productivity growth, workforce growth in the rich nations, pretty slow. And particularly, you know, for those nations where populations are falling, and working age populations are falling, the likes of Japan, Germany, Italy, very slow. It's the nations that can shift and will shift people from farms to factories that will see the fast growth. You know, it lifts the productivity of the remaining farm workers, it lifts the productivity of the people who move from the farms to the factories, it lifts the income. In 2009, we know that people are going from factories back to farms, but the great march of history will send it in the direction that it's gone for decades, for centuries. You know, the key might be China, but let's not forget, there are now 2.5 billion people around the world. You know, China, India, Brazil, Turkey. You're seeing it in Vietnam and Indonesia and the Philippines. You will see it down the track in Africa. The poor world can become richer because it's easier to catch up. That will drive global growth for decades to come, long after the financial crisis is relegated to the history books, let alone not on the front pages. And that will be very important to Australia because we sell, you know, unusually amongst rich nations, we have a lot of resources. The thing that we are best at is selling industrial inputs to developing Asia. You know, the coal, iron ore, copper, nickel, the rest of it. We rode the development in Japan. And then in you know, Taiwan and Singapore, Hong Kong and Korea, and then it moved on to Thailand and Malaysia. And now the difference is it's 2.5 billion people. You know, it's not 100 million, 120 million in Japan. It's a lot more. And that is a magnificent long-term benefit to Australia that will long outlast the current crisis.
As you've said, the financial system will ultimately be repaired, but that's going to take presumably a greater level of government regulation, more government involvement. And there's a philosophical discussion here, a philosophical debate, because there are concerns that in time that might then potentially place constraints on the private sector, which ultimately is the driver of economic growth. What do you think it's going to take to get the financial system back on its feet? And is there a danger that governments might simply over-regulate? We might overshoot, if you like.
Oh, there's all sorts of risks, and what's happening internationally and in Australia has already included a bunch of mistakes. Having said that, you know, compared to history, the policy reaction is fast and it's good. I don't think it's enough.